jump over to sugar. In a corrective mode, 77 to 922, RS is firm down. That's really the most important thing. Look at how this is trading. RS is down. I know this is, for for some folks, this may seem like it's too short, but these are really calculated swings because the RS is down and the slim ribbon is firm down, right? These are all little trading opportunities to be fading rallies back into that falling ribbon, right? That's kind of what I like to see, right? I like to see things where or setups, I should say, where they are very calculated. I know what should happen at given moments in time. That's really what I look for, and that's why, far more often than not, I'm trading with trends, because when you are trading with a trend that is either to the upside or to the downside, there are there are simply things that just should happen at given moments. Like when all three EMAs are down, you should see a bear flag that forms back into that to be sold, right? When all three EMAs are up, right, you should see a bull flag form into the EMAs that get bought, right? So like I just like to keep it really simple. We don't have to make this overly um, complicated, right? There's so much noise that just gets cluttered, all this news and all this stuff. Just focus on the actual price action, on what's actually happening on your chart. Where did those good buying opportunities or shorting opportunities based on your time frame and your overall style, where did those show up on the chart? For me, it may be something, you know, different than for you, which is totally cool. I spend all of my time in office hours and on our trade ideas feed trying to share with you what I look for, but that does not mean that that's what you have to look for. But you do have to have some clean process that you're doing in order to actually scan for your opportunities. You also, need to know very clearly how you trade each of your setups, because in the end you can have great ideas, but if they are not managed properly, who cares, right? So you have to really hone in on how you're actually buying and selling, and how you are truly managing your open risk, because in the end, right, we don't know what's going to happen. We are simply risk managers. I see that firmly. I 100% believe that we are just risk managers. We don't know what's going to happen, right? Nobody does. So we just have to be really good at managing our risk when things are going well, and super importantly also when things are not going well, so you can manage those draws as well as you can, which we will all go into. We all, will have draws, but you have to keep those as shallow as you can. How do you do that? You can do that by actually watching your, let's just say, over the past 5 to um to 10 trades, based on how often you trade. What is your average win, average loss looking like? If you are all of a sudden seeing smaller average winners, you should be also keeping your risk tight, because you don't want to have uh those losers all of a sudden, um all of a sudden wipe out like a really good period that you had, right? Which has happened to everybody. In order to do that, you have to really be very closely watching that average win, average loss over set intervals, so that way you can keep things tight, and really do that quickly to keep those draws managed. And then when things are actually working well again for you, you then will start to be trading bigger when things are going well, right? And you'll then on the downside be trading smaller when things aren't going well. That's really what you want. You want to be trading at your best and have your largest size when things are going well, and when things are not going well, you want to be trading at your smallest size. It isn't just I'm going to risk X amount every single trade. That's not how you should be trading. It should be variable based on how you're actually doing and whether what you're looking at is um, and whether what's going on in the overall market environment is really in sync with what you do. That is really that's what really matters. Everyone is so crazy focused on the setup. It's not the setup, it's the management. The management is where traders fail. It's not the setup, it's the management. So really think about that. That is where all of the energy needs to really go, not just into what do I think is going to happen. It's all about management. You can have somebody who has a low batting average in that like 30 to like 40% range, but has a great overall average win loss. Let's say it's 4 or 5 to 1, and they can make money, right? But there are other folks who can have really high batting averages. Let's say they're in that like 60 to like 70, but their overall average win loss is, let's say, like 0.8 to 1 or less. They may not be making money. So it's all about how you're actually managing your risk and how you're managing your trades. That's what matters. Okay? Super, super important.